Hello guys, we're back on Step Index. I hope that everyone is doing well. On my side, man, I'm happy. Right? Step Index is making me happy. Okay, so we're looking at the daily time frame on Step Index, and our last commentary, we were talking about the Judas fake move here that happened right around the 26th. It was Friday, I believe. Yeah. So essentially, what happened with this price action, you need to watch the video that I posted, framing a trade setup. That was what that video was explaining, especially about this particular high. So you would need to check out that particular video. So essentially, I used market structure. You can just say that I used the resistance to go lower and attack the support down here. Yeah, you can frame it like that. But if you watch that video, you're going to understand the price action that is before you. You are not aware of it at the moment. You may not have it in your hands at the moment. You may still be scrambling when you open a chart, right? Or you may be already trading. You have a particular model that you've been working on and it's not going in the direction that you expect it to. It's taking longer, you know. I'm here, my buddy. If you want to understand a certain strategy, I am here. I trade ICT. That's all that I do. So if you are from another methodology, then here just know that I trade ICT. I'd die for that, man. I'm kidding. I'm just kidding, guys. All right. So we took out the buy side liquidity, and there was this particular fair value gap, right, that I spoke about. And pertaining this particular fair value gap, I just said that if we were to trade above the consequent enroachment, then that would mean my bias changes. But as you can see, we did come into that fair value gap. So I'm gonna paint it the way that I first shown it. It was in a green color. All right. It was in the green color. So let's just delete this for a moment so that we can appreciate the consequent enroachment that we are seeing here with the respect of the candlestick bodies. They may color outside the lines a little bit if we zoom in a little bit into this fair value gap. It's just a random fair value gap. No, I spoke about this fair value gap. All right. I mentioned how the consequent enroachment initially was being respected here. I said I like price action, not trading inside of this inefficiency. I like it when I'm looking at a fair value gap and the candlestick bodies, they're not trading inside of that fair value gap. That means that order flow is bearish. That means that you can take bearish setups. That means that you can trade those bearish setups in those specific times of the day. And you already know the times of the day. I'm trading the PM session at the moment. It's going lovely, but it's really, you know, I don't know how to put it, man. Trading the PM session is really wild. Okay, but we'll get into that. So for the moment, we are just talking about this fair value gap that happened on May. And if you can see this fair value gap, it has another fair value gap just above it. What is this particular fair value gap? It is a breakaway gap. A breakaway gap breaking away from what? From the 20th, right? From the 20th price action, we are breaking away, leaving this inefficiency. We create a market structure shift here. And we create this displacement fair value gap. It's huge. So this was the play for this June's price action. Okay. I hinted it out. I said that price action should respect the 50% of this inefficiency. And if it doesn't, then I'm going to change my bias. But we just see price action coming up here to take out the buy side liquidity. Now we have a new range high to this particular low. So within this dealing range, I showed you the internal liquidity inside of this dealing range. So we're going to hop on the lower time frames. Obviously, the draw on liquidity was 5 June low. That's what I was looking for initially as my first target. And we got that particular low beautifully on a Sunday. All right. Sunday was beautiful. It tapped into that. And this is Monday. So there is this thing that is repeating in nature in Step Index. Whenever it creates the low of the day, and I just said in the previous videos that I'm going to be dropping a video explaining the low of the day or the high of the day or of the week. Okay, that's what I am essentially focusing on when I present price action or in the beginning of the week. So essentially what I want to show you in the beginning of the week is how these liquidity pools are printed. So we have Monday's low, which is the low of this particular week. So I think that this low is going to remain open like this until we trade inside of this inefficiency. And after we trade into that inefficiency, then we can take shorting opportunities and go to attack this 10 May low. Now, right off the bat, it sounds insane. But I tell you, your support and resistance ideas, they don't work. 5 June low, if you're looking at that as support broken, now it's going to be turned into a resistance, you are out of luck, my brother. Because if that worked 3 years into trading, I would be rich, because that's what I was trading, support and resistance. And these lows, they never got respected as a break and retest. So we are closing below this particular low, 5 June low, when price action reacted away from the consequent enroachment of this inefficiency. It moved away really quickly, right? It printed this inefficiency. And we have another one here. That is beautiful. That is beautiful. So I'm going to see if price action wants to trade inside of this inefficiency. And if it does, that kind of price action that I'm going to be explaining to you in the 1 minute time frame is essentially what you're seeing on the daily time frame. See how long this took for price action to just come into that fair value gap and go lower? How many days did it take for it to reach the 5 June low? It took a long time, right? But if I go into the lower time frames and I use this particular logic, right, the one that I've been explaining on the daily time frames since the start of this intraday commentary, the daily time frame is basically the mind map, right? And I showed you how I find these particular liquidity pools. So this is a higher time frame model, but I'm going to transpose it into the lower time frames, the 1 minute time frames. And we're going to be indulging in the trade sessions that are available. For me, I trade the PM session. So let's hop into the 1 minute time frame. Oh man, I'm having fun producing these videos. This is nice. So right off the bat, I have a trade setup that is running. As I said, we have this Monday's low. It is the low of the week, guys. It's the low of the week. So I also have this fair value gap. Now I'm going to change my time zone to New York. Oh man, here he goes again with the New York time frames. What is this guy changing here on the time zone? Well, essentially, guys, I want to be seeing price action in the way that I see it in the real world. Now, in the real world, when price begins at 6 o'clock, what is 6 o'clock in New York local time? Well, that is the New York session open. So what have we been doing prior to the 6 a.m. New York Open? We've been consolidating, right? We've been moving around in a way that is not really tradable, right? Because we just took out the 5 June low, price is not in a hurry to do something. So they waited around 6 a.m. 6 a.m. What is there in the 6 a.m.? So let me just put a line on it. Right, this is the New York session. And in the New York session, I refer to New York price action with an orange color. So above this New York, or just next to this particular New York, 6 a.m., which is the opening of New York, we have this particular high that was printed in the London. So a London high is nested with a 5 a.m. high is here as well, nested with this London opening right here. And just after that, we have this 6 a.m. high. So all of this is liquidity. Here is the 130 opening session. We have a fair value gap in there, remember? So that session, fair value gap, the very first fair value gap after 130, the 130 is the opening range for London session. So we associate that with the green color. And I'm going to zoom in a little bit so that you can see the London fair value gap of today. All right. So here is 130. So it's this huge fair value gap right here. So I'm taking it from the volume imbalance. Okay. So let me zoom in a little bit more. If it has a volume imbalance, then we include the volume imbalance. Sometimes price action can trade inside of an inefficiency, but the wick, it goes into the volume imbalance, but closes at the consequent enrichment. So you see that respect of that particular fair value gap. That's when you know that is your fair value gap, your London fair value gap. All right, it's green. So oftentimes we're going to come back into that fair value gap. But essentially what we see with today's price action is that price action initially used the London fair value gap. It went lower with it. Okay. Prior to London session opening, we had this run up. It took out these buy side liquidity poles and it printed this market structure shift. The fair value gap itself, beautiful. The respect of the consequent enrichment, that is wonderful. All right. Pretty good shorts here, man. Okay. So 5 a.m. we try to retrace back into the initial fair value gap, but as you can see, we failed. We failed, guys. Those guys, they said, oh, it's been going up for a little while, so we don't want to see it coming back into that fair value gap. So we make sure that we hammer it down. When do we do that? Let's do that in the New York session open. And there they are. Right off the bat, boom, it goes lower, right? So in the New York session, the opening of the New York session opening range, there it is, the fair value gap. So I'm going to zoom in a little bit so that you can see the fair value gap as well. So this fair value gap, as you can see, was not traded to up until here. So it printed this particular low, almost touching the 10-day low. By the way, guys, this is the low of the week. Okay, the low of the week, it is 7895.8. That's the low. We're going to come back to this particular low. All right, but now we have to retrace. If this is the low of the day, we need to retrace going upwards. Okay, so that's essentially what is happening. So price action needs to trade above a session fair value gap. That session fair value gap, brother, sister, listen to this. I am taking price action from the daily time frame, right? And I am skipping the 4 hour, I'm skipping the 1 hour, the 15, the 2-minute, the 5-minute. I'm skipping all of that and I'm going to the 1-minute time frame. I'm showing you the fair value gap. This is the one. So initially it was used as resistance, but since we are above it, now the character of the fair value gap changes. The change in the state of delivery for me is defined by these fair value gaps. So the entirety of this commentary, we are going to be talking about these session fair value gaps. So you need to familiarize yourself with those fair value gaps. So we have traded above our New York session fair value gap, right? We've come back, right? So what did we leave up here? That is 12:08. What is that? PM session, New York session lunch highs. They are there. It's lunch hour, right? And just after an hour, there is the PM session. It opens at 1:30. So we're going to zoom in on our PM session. So 1:31 and 1:30, we have an inefficiency right here. Right? What is that? That is our PM session fair value gap. Now, whenever this PM session fair value gap has some form of liquidity above it or just hovering above it, that is liquidity. This is the model that I'm trading. You can go up and down with price action. You just need to understand where you are in terms of the particular day of the week. So we just created the low of the week right here. We just went above the New York session fair value gap. We are treating it as a support. The liquidity, as I explained it, whenever there is a session fair value gap, and in that session fair value gap, it is surrounded by these ops. These ops are the guys that we need to take out. So how do we do that? We support on the very same fair value gap. The one that we used initially as a resistance, we are now utilizing it as a support. So these highs that are hovering above these or below this particular fair value gap, we're going to come back to them. So we need to see it pop up into that buy side liquidity. But otherwise, I'm going to leave that trade running like that. Or I could just leave it running up until the buy side liquidity pool here, the New York session open. That's where the liquidity is. And as I've just explained what liquidity is, we have a session fair value gap in London. And just below it, we have 231 buy side liquidity, which is nested with the 5 a.m. buy side liquidity. That is the London lunch. So London lunch, you know, London is associated with the green color. There it is. So we've got New York right here and London. Let me zoom in. Don't worry, we can just add another position when it touches that particular fair value gap, just when it touches it. At this particular point, I don't want to see it trading inside of it. I just want to see it continue going higher, right? I don't want to see it come inside of that fair value gap. Now, I am long right around the 14 o'clock hour, the 2 o'clock, just when price took out this sell side liquidity and it went up, right? I was in profit, but now it's coming back. So when you have moved away from a particular fair value gap and you reach some kind of a resistance, maybe the PM session fair value gap, just like this one, we hit that particular level, right? And we have retraced. So when price is retracing back to your entry, you don't want to see price action because we have 3 levels in ICT. Because of those 3 levels, we don't want to see price action trading back to either of those levels, especially if you're in a trade, the upper quadrant, that's enough for me to say that, okay, I'm still in control of this trade. Let me just let it run. You see, but if price were to trade back into the consequent enroachment, that would be very alarming. Very, very alarming. And especially if it trades below that fair value gap. That is, well, I'd close that trade right there. Break even. Right? So you need to be careful around these particular guys. So you will see how it moves just above this fair value gap. Since we are going to utilize it as a foothold to drive us up into this buy side liquidity, you're going to see how it's going to trade. It's going to be massive. If I am right in my analysis that we've created this low of the week. So you guys would have to tell me which day you want a particular review on. That is the other last video as a bonus to give you guys a more depth understanding of a particular day that you want help on. Maybe you try to trade this bearish market tone and you got slapped around. How would you like to replay that particular day in a more in-depth review of that particular day, right? So yeah, that's all that I ask for you. In the comment sections, just tell me which particular day that I should review after this video has been posted, right? My New York session has been respected. As you can see, yeah, we dropped lower, right? We did drop lower from the PM session, fair value gap, and we went lower. But we never got to our New York session fair value gap. So that means that I am in the correct trade, guys. All right. So how many points is this going to take? Let me see. Around 22. I want to take it to 25 into that fair value gap if I can. By the way, 25 points is a full pull. So if you're able to accomplish these particular trades, 25 points, guys, this is the target for you, a full pull. So that's what I'm attempting here, okay? I want those buy-side liquidity pulls. I want them. They're so delicious. They're saying, eat me. Okay? So if you're on the other side of that, you're trying to go bearish, maybe looking into this particular fair value gap. It is a London session fair value gap. Maybe you're trying to go bearish in that. Well, you just have to understand that we have a daily time frame fair value gap that we would need to visit. And I spoke on it, I touched on it. I explained that there is a higher time frame inefficiency that we may want to visit. So this is just attempts into that particular fair value gap. I am basing my trade on that particular principle, that there's a higher time frame that we need to get back to rebalance it, to make sure that nobody is being left out before we go lower into delivering into that particular low of the day, right? So if you are there trying to attempt that particular London session fair value gap to go bearish, you're going to be in trouble, my boy, because there's that higher time frame fair value gap. So the higher time frame fair value gaps or higher time frame market structure, it precedes the lower time frames. So you need to be careful when you're trading those PM session inefficiencies. You need to understand where you're coming from in terms of the weekly range. I touched on the daily range when I began my first video, the June mega trade. You can clearly see that I was reviewing the 23rd of June. I was just giving you guys a daily range review, like from the London session, New York, PM, and all of those in-between sessions, like the New York session, lunch hour. It's an hour and 30 minutes, by the way. or those 5 a.m. to 6 a.m., the London session lunch, right? So I was just introducing the daily range. But now in this particular video, we are talking about a weekly range. So I'm talking to you when we are creating this particular low of the week. So when we are creating a low, we need to see price action retracing going up. And how does the price action look like when it goes up? Those session fair value gaps, as I said, they need to be respected. So price action is agreeing with my bias that we need to retrace into that daily fair value gap. But I could be wrong because the daily time frame hasn't even closed. So I don't have a confirmation yet. But I can go in those sessions and attempt these particular trades. Okay? I hope that we are understanding each other when we are talking about the weekly range. So we have created a low. We are moving away from that low. So this is the price action that I want to see when we are delivering those particular sessions. Okay? So I'm just going to pause it. I'm just going to let it record, just like the first video, or is it the second, where I showed you guys a fast-forwarded recording of a particular PM session. That was beautiful, okay? So it's gonna be similar to that particular video. So I'm just going to leave it recording like this.